Apple posted the strongest June quarter in its history, yet its stock fell more than 8% after hours by 5:34 p.m. Eastern Time. The reason sits inside the gap between the quarter Apple completed and the one it now has to deliver. Revenue reached $109.4 billion, up 16%, and earnings rose to $2.02 per share. iPhone revenue jumped to $54.25 billion. Mac revenue reached $10.35 billion. Together, those two businesses generated nearly 78% of Apple's year-over-year revenue increase. But the growth was not evenly spread. iPad revenue fell 5.9%. Services rose to $30.74 billion, but missed the consensus estimate. That matters because services supplies recurring revenue after a device has already been sold. Apple also said tariff refunds added 11 cents to earnings per share and about 2 percentage points to gross margin. Even after removing that benefit, the quarter still beat the cited earnings and margin estimates. The sharper concern came from the next quarter. Apple projected revenue growth of 9% to 11%, below the 12% consensus. Tim Cook said the company was facing very significant supply constraints with limited flexibility, especially in the advanced chip-making capacity used for Apple Silicon. That warning came during Cook's final earnings call as CEO. John Ternus, Apple's hardware engineering chief, takes over on September 1st. The supply bottleneck will therefore sit near the top of the operating agenda he inherits. Apple's new leasing program can spread the monthly cost of an iPhone, Mac, iPad, or Apple Watch. It cannot produce more chips. The next earnings report will show whether Apple can turn record demand into delivered products while restoring stronger services growth.